This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 187 is brought to us by Bybit. Tell you what, 2 weeks ago, we had a big move down. Last week, we had a big move up. Investors, we kind of broke even for the most part in the crypto world, but traders absolutely murdered it. And it's great to see. Congratulations to all of you. And there's no reason most of you shouldn't be in on this. And you can be a part of this with a gigantic, well-capitalized broker that gives you so much more than just simple trading. A gigantic spot market, airdrops, promotions, giveaways, contests, all of it. All you have to do is go down and click the link in the show notes that takes you to the Bybit blog that keeps you updated on what's going on. Then click my affiliate link at the very bottom. Once you do that, you still have to deposit and actually trade. Don't forget that part. But you are locked into an ecosystem that just keeps on giving, because with Bybit, as we all know, membership has its rewards. It is the 10-Minute Contrarian Podcast. And yes, I did move this episode up a week. We'll do the big energy episode next week. Make sure you stay tuned for that one. That's always a good episode. But I just had crypto on the mind all week. I was constantly going over to my notepad and putting down notes, even though the episode was 2 weeks away. So I figure while it's all top of mind, we may as well just go ahead and do it now. Now, the way this episode is going to play out, I don't want any false expectations here. I'm not going to be talking about a lot of individual tokens. This is going to be a more broad overview of the crypto market. I will make my Bitcoin prediction, as I do every year, and that is how it's mostly going to be. So if you guys are all curious as to what I think about the tokens that you hold, that's going to be more future episodes. But this one's going to be a long one, so I just don't want anybody having false expectations and then they listen for 30 minutes and they don't get what they want. But regardless, you are going to want to stay tuned for this. We are jam-packed with lots of really, really great information that you're going to want to know, bullish and, believe it or not, some bearish, as we move forward here in what's going to be a really pivotal year in 2025. You're going to have to really keep emotions at bay. And I think what's been happening in this past probably 12 hours is a real testament to that. So if anybody's listening to this in the future, where we are right now in our history is the big Trump meme coin, or what's supposed to be the big Trump meme coin, just came out. And Twitter has not let it go. It is literally all they are talking about. It's currently up to a $32 billion market cap, I think. And I could honestly give a shit less. And you shouldn't care either. This does not affect us. We are investors, grown-up investors. I want to remind everybody of that, because I think this can get lost every once in a while when even some of your favorite follows on Twitter, who have very large followings and big podcasts and big YouTube channels, can't stop talking about Trump coin. Keep in mind, they're doing it not because it's in your best interest, but because they have numbers to maintain. Now, yes, 2024 was a big year for meme coins, I guess, as a space, but you have to remember, too, it's only the very top 0.1% of meme coins that come out that actually have staying power and become something. For every Shiba Inu and, you could even say Fartcoin, there are probably 1,000 other meme coins that don't make it at all. To keep it relevant for 2024, your Hawk Tua coin, to where only the people who were in on it, only the people who were in on the creation and the pump and the dump of that coin were the ones making money, not you. If you want to allocate 2% of your crypto investment to screwing around with all these ha-ha hee-hee coins, go ahead, have fun. Maybe you won't have as much FOMO as you would otherwise. But I have zero FOMO. Meme coins are what they are. I don't care for them, but that doesn't mean they don't exist. But I don't take a poor person's approach to this market. I'm not looking for 100x gains in a token where the rules and everything really is already stacked against me. If that's you, go ahead. But that ain't us. I'm interested in coins and tokens that are actually stacked in my favor, not against me. I'm interested in things that have real adoption. Because if this really is the future of payments and computing and gaming and everything else, only some of these projects are going to make it through. But the ones that are going to make it through are going to pay us off really, really well, as the majority of them already have. That's the craziest thing about asymmetrical investing, contrarians, is that if done right, you can get paid off really, really well and still take very few losses, which is absurd to even think about. If we even hit 15%, we're going to do really well. But we're barely taking any losses over here. Now, granted, some projects and tokens and things like that, we're waiting for the wave to come. We'll talk about that too. But I just want to let you know that this more mature approach and sticking to projects that have a much better chance of actually making it is absolutely the way to go. And if these past 4 years this podcast has been in existence have not taught you that, then you're just in the wrong place. And I'll save you the next 30 minutes or however long this podcast episode goes on. It's just not for you. Maybe come back when it is. But for the rest of us, oh, buddy, what a beautiful, beautiful situation we have going on right now in the crypto market. The big deterrent for most institutions, you have to remember this, institutions are where we're really going to win once that money starts coming in, was the percentage chance that the United States could come in and squash anything crypto was trying to do or anything Bitcoin was trying to do. If there was even a slight chance of that, these institutions wanted no part of it. Now you might be saying, well, why don't they just allocate maybe 1 or 2% of grandma's pension to something like Bitcoin? If it does get banned in any type of way and collapses, then it wouldn't be that big a deal. Well, you don't understand. That's also a reputational risk as well. Let's say for some reason the government would have come in and either just killed it altogether, banned it in the United States, or made it so you could only go through their channels. Whatever the case would have been, it would have been extremely bearish. And then that firm would have been known, remember their clients are all older, would have been known as the one who recklessly put their clients' money into something like Bitcoin or other cryptos. They weren't going to do it at all, even if the chance of something like this happening was very slight. So it was an irrelevant argument until now. And if you don't think this is significant, just go back and look what the market did right after Trump won on November 5th. They knew. And remember, this is not a retail bull run. Retail as in dumb money. This has been, and will probably continue to be long term, an institutional bull run. Smart money. Big money. Influential money. And all they needed was a clear path, and we now have it. Everybody from the Treasury Secretary to the SEC Commissioner to the SEC Chair. We even have our very own crypto and AI czar. Now, they are all on board, as is most of Congress in the United States, are all very crypto friendly. And think of this too. If you were able to get all of Congress in a room and say, okay, if you're pro-crypto, raise your hand, and they raise their hand, the people who didn't raise their hand are not necessarily anti-crypto. Very, very few people in Congress were ever anti-crypto. They either didn't care, which is pretty much neutral, which means they can easily be swayed over time, or they can do what we do. They can learn about it, become more familiar with it, and end up in the pro camp over time. Or they were being manipulated by the big banks and had this artificial pretend anti-crypto stance. At their core, they were never really against it, save maybe a very small handful of people. So this is extremely bullish going forward. Trump even came out and said this week that crypto is a national priority for by far the largest country in the world when it comes to GDP. And institutions will be flooding in. There are so many avenues being created now. There are over 50 crypto ETFs on the slate for 2025 approval. And I'll talk a bit more about that later on. But it is all green lights ahead. Not to mention the strategic Bitcoin reserve, which the United States has talked about. Now, they might not be putting any actual money into this. They did confiscate a bunch of Bitcoin from criminals, and instead of giving it back to the people that the criminals stole it from, they just kept it. You can say what you want about that, but as far as us investors go, we do what we're doing with Trump coin. We are distancing ourselves from anything like that, anything involving emotion, anything involving what's going on right this second, and sticking to what is. So even if they just take that Bitcoin and turn it into a Bitcoin strategic reserve, the ripple effects this would have around the world and stateside, both, will be tremendous. Now, I say stateside because there have been 8 U.S. states also talking about creating a separate strategic Bitcoin reserve for themselves. So you have New Hampshire, Alabama, Florida, Pennsylvania, Texas, Ohio, North Dakota, and Oklahoma, all saying they want in. Now, other sovereign nations, other countries should follow suit, and that will be big news when they do. But I just want to put this into perspective, contrarians. The GDP of these individual states that I just mentioned are bigger than most countries. The U.S. is a GDP powerhouse. A lot of people don't even know. Let me put this into perspective for you. So I'm going to list off these 8 states and tell you whose GDP they are similar to. So let's start with North Dakota. Some oil in North Dakota. It's not completely barren, so they do have some money. But their GDP is approximately the same as the entire country of Serbia, one of our lowest performing states in terms of GDP. Right up there with Serbia. Let's go up the ladder. New Hampshire. Tiny little New Hampshire. What does New Hampshire even produce? I couldn't even tell you. A very similar GDP as the country of Oman. Oman's got a lot of oil, if you didn't know, and it's a very interesting country going forward. But third world, it is not. It is quite rich, actually. Yet only about as rich as the state of New Hampshire. Shall we keep going? I think we should. Next is Oklahoma. Oklahoma's GDP is around $254 billion. That is higher than the country of New Zealand, a country big enough, wealthy enough, and prosperous enough to have their currency be one of the 8 major currencies in Forex trading. Oklahoma is bigger than it, and it wants to have its own strategic Bitcoin reserve. Let's keep going. Alabama. Hee-haw ass Alabama. What do they even make over there? Well, it doesn't matter. They have a $300 billion GDP, which is larger than the country of Chile, a very developed nation with a huge mining industry and where most of your copper comes from. Still can't produce what Alabama produces. Now let's get to the heavy hitters. Ohio's GDP is right on par with that of Switzerland, where almost all of your nice watches come from, where all of the rich people in the world put their money. Also has one of the 8 major currencies. It doesn't matter. Still can't even beat Ohio. Pennsylvania at $965 billion gross domestic product is right on par with the Netherlands. Florida's is right on par with Spain, and Texas is right on par with the entire country of Brazil. And we don't have to sit there and wait for big corrupt governments to get on board with this. These 8 states alone are already on board, and if you think these are going to be the only 8 states in the United States who will be on board with their own strategic Bitcoin reserve, I would take the other side of that bet in a heartbeat. So would you like some more early adoption bullishness? I have some for you. There are approximately 2,800 billionaires in the world. And I saw something on Twitter this past week saying that only 60 of them, 60, hold Bitcoin. Now, if you're a billionaire, you already have enough money. You don't really need to worry about making a whole lot more. You don't need to really worry about the upside, the asymmetrical upside that Bitcoin can give you. But you are probably interested in preserving that wealth. And I've said this in the past, having at least one Bitcoin is going to be considered a huge, huge flex in the future. And the reason why, if you didn't already know, I will mention later on in the show because it is my biggest bull case. And it needs to be repeated over and over and over to all of you. but there's so much room to go there as well. And when it comes to preserving your wealth, one of the biggest hedges that we have found that Bitcoin provides, even with its volatility, is a hedge against inflation, which nobody likes. Rich, poor, doesn't matter. And if you're wondering why the price of Bitcoin and most of crypto went up this past week, is it was actually going down, and people were talking about it continuing to go down until the US CPI report came out, and it pointed to more inflation. And so people immediately jumped into Bitcoin. Now, gold went up too, but Bitcoin went up a lot. And when we had the banking crises back in 2023, people flocked into Bitcoin. I did not expect that. But it is now also becoming defense, not just offense. And that is extremely bullish moving forward, because now it really doesn't matter what's going on in the world. Bitcoin is going to be an attractive option for the good times and the bad times. And where Bitcoin goes, the rest of the market typically follows. So let's talk about the rest of the market, not just Bitcoin. When it comes to Ethereum, Ethereum had their ETFs in the United States come out this year. There were already some in Canada and I think in Europe. But the United States finally got theirs, and as we said in the macro episode, it really just matters what happens in the United States when it comes to a lot of this stuff. Maybe not gold and silver, like I said last week, but it's monumental when it happens in the United States. And those ETFs came out, and if you recall, they did not have a great start at all. It was a very lackluster, underwhelming start. But they didn't finish that way. The iShares Ethereum Trust ETF, ticker symbol ETHA, ended up being the third highest debuting ETF in all of 2024. This includes all of the Bitcoin ETFs and all approximately 500 of the ETFs that debuted in 2024. So when these other altcoin ETFs start coming out into the market, and even if they have a slow start, don't scoff at them. People want in, and a lot of them just needed the avenue to do it. And they have that now, or they will have it in the future. Because like I said back in the dinosaur coins episode, the dinosaur tokens episode, whatever I called it, you guys know the way we do things here. We don't pay attention to the current narrative. We zoom out. And while everybody was saying that things like Cardano and XRP were dead projects, we understood, and I learned this by investing in the metaverse too early, that these things take time to build and take time to grow. And if you remember too, we did a whole episode on all of the partnerships a lot of these older dinosaur tokens have, or the projects behind them, I should say, and how this is just going to be a slow build. And lo and behold, in 2024, things actually started to materialize, and these things took off, rewarding the people who understood all these things, which I'm telling you, that was such a small amount of us. Some of the biggest, most popular, and intelligent crypto platforms out there had given up on these projects a long time ago. But we didn't. And that's why we got paid. And that's why we are sitting in a golden position moving forward as these things continue to get more adoption and work their way in ever so slowly to everyday life. A lot of you out there are excited about some of these products that just came into existence in the past year or two. And that's fine. Some of them will end up being one of the big boys. But I keep saying it on the show Contrarians, the asymmetrical upside that we are looking for can already be had in the projects who have actually already gotten there. And if you can just resist taking losses where you don't need to take them, you can still have everything you want. And this methodology was validated in spades in 2024. So just remember that going forward. XRP, for example, one of the top 4 tokens out there, has already given us about a 6 to 7x return. You know, how broke do you have to be to say a 6 to 7x return is not good enough for me? I'm going to chase 20 to 100x returns. Well, you know what? You're going to hit a couple of those, and you're still going to manage to underperform us long term because you're going to take too many losses. And you're not going to understand that until you've actually accrued enough experience to understand that. So like I said, if you want to be a heavy speculator and take a little bit of your stack and go into tokens like that, that's fine. Just don't get too caught up in it is all I'm saying. Let's continue with the bullish cases because there are still some. There's still quite a few, and there's some I haven't even thought about. But one of the big things you're going to see going forward is yield. We had a whole episode on passives called FYPM, and I don't think a lot of you took that very seriously because when you see passives, you see a small percent, and you do the math, and you're like, this is not significant. Why would I even bother with anything that gives me a 4% yearly return? Bitcoin gave me 4.5% yesterday. Well, it's because you are probably young and inexperienced, and you don't understand these little percentages really add up over time. That was the whole main idea. That was the whole lesson in that episode. And what we also try to do here, and what I've just been really trying to articulate this entire episode, is we want to do things the way rich people do them, not the way poor people do them. And if anybody gets upset because they think I'm calling them poor, that's fine. That's just going to have to be the case. Because on this podcast, we have multimillionaires and we have people who barely have 2 nickels to rub together. But we all want to do things. We all strive to do things the way rich people do them. Because that's where almost all of your successful investors are. And I'm about to talk about some of the bear cases I might see in the market. And nobody understands the value of having these great passives that are going to pay you no matter what until they start seeing a real downturn in the market. Then it all makes sense to them. And then the market goes back up and they forget. But, that's their problem. That's not ours. But yield is a big deal. And the point I'm trying to make here is it's a really big deal to rich people and to large institutions. And they will now, through some of these products coming up off-chain, be able to do that. Not to mention what's already going on-chain with DeFi 2.0 in terms of being able to generate really nice yield without going over the top. I'm sure not everybody's going to learn the lessons from BlockFi and Celsius and Voyager and places like that. There will still be some of these companies that fail. And going forward, be very careful when you see yield that just doesn't make any sense. Like Richard Hart says, don't risk your entire stack for a 7% return. You should not have all of your money out there trying to generate yield, even though in a way it kind of makes sense to do that. But on-chain, at least, we're still pretty new, and DeFi can get hacked. And some of these DeFi companies are not going to be what you thought they were. So be careful, but please know that chasing yield is 100% a rich person's game. It is all a lot of them even care about. So they're going to be very interested in yield that is higher than what they're getting, yet still relatively safe. And I think a lot of these upcoming ETFs are going to provide that, which is super, super exciting. Because remember, too, overall, what cycle are we in? Are we in a rate hiking cycle on planet Earth, or are we in a rate cutting cycle? We're in a rate cutting cycle. And the lower these rates get, the less yield is going to be available in traditional instruments, which means people are going to want to turn somewhere, right? And if you look at Wall Street and you're a hotshot investment banker on Wall Street and you're not utilizing this, but your competition is, and they are out yielding you, that is going to be a problem. And you're going to want to fix that problem as soon as possible. And as we've seen, even in grown-up land, crypto can give you a very attractive yield regardless of what the market is doing. Maybe this doesn't seem significant to you, but I would recalibrate the way you think if I were you. This is really, really big. I even saw an interview with a bond trader, which I don't understand that world at all. But the way he was putting it, he said, look, Bitcoin makes all of this entire industry, which is a $1 trillion industry, much easier, cheaper, and more efficient. And that's just Bitcoin. So if any of you did not believe me years ago when I said this is the future of finance, welcome to 2025. You just got left behind, and you will continue to be left behind if you don't get on board with this. But after all I've just got done telling you, can you guys guess what the number one bull case is for Bitcoin in particular? It's the same as it's always been. I did an entire episode on this, and I will not stop talking about it now or in the future, so get used to it. But unlike gold, unlike cash, unlike stocks, there are only 21 million Bitcoin out there. And that's just the number they started with. I would be willing to bet that it's probably closer to 16 million now. But it is finite. Bitcoin is finite. There's only so much of it to go around. I'm telling you, this will happen. I don't know how soon. But there's going to be a point in time when you get all these institutions in and they start using Bitcoin for all these different things, and it becomes wealth preservation, and it becomes a flex, and it becomes all these things. Institutions and billionaires are going to want X amount of it, and it just won't be available. There will come a day where BlackRock turns to Coinbase and says, okay, I'm going to need another 5,000 Bitcoin. And Coinbase is going to say, we just don't have that much anymore. When something is finite, it runs out. You cannot create more of it. Miners can, but at a very slow rate. Certainly not fast enough to keep up with demand. The only way you would be able to get more Bitcoin into the market is for people to sell it. And the only way you would get some people to sell it is by raising prices so high that some people out there just couldn't resist and they would end up selling back into the market. And even when they've done that, you've only solved a very temporary problem. Again, this might seem absurd, but we've never had anything like this before. We've never had a finite resource like this. I still don't think most of you understand this. But now I think would be a good time, since we are at peak bullishness here, to talk about the bear cases, because bear cases do exist and we always need to be aware of them. Once we all end up going into la la land is the exact moment everything crashes. Don't believe me? Check your history. So I guess now would be a good time, before we get into the bear cases, for me to state my Bitcoin prediction for 2025. I am going to say Bitcoin will be higher than the price it is right now. Let's check the price. 103,626. So by December 31st, 2025, it will be higher than 103,626. But as I said in the first episode of the year, I'm not super confident with any of these predictions, but I would say this Bitcoin prediction would be my most confident of the bunch, but it's still pretty weak. Now, here's why I say this. If you remember the macro episode from 2 weeks ago, I said there could be a real chance of a downturn, maybe not a recession, but maybe a recession. And as we've seen, Bitcoin still correlates with the ETF TQQQ pretty heavily. Now, eventually, I said that correlation should break. But until it does, you have to understand market behavior too. I'm reading a really great book my friend gave me on economic bubbles over the course of history. And if anybody remembers the South Sea bubble from the early 1900s, it was an investment that just couldn't miss. But the reason why it began to drop, and once it dropped, then the cracks in the foundation really started to open. But there was no reason for anybody to sell, but the only reason people did is because it was a time in history where everything else began to drop. And so people just had to sell anything they could just to get liquid. Remember, everybody panics into cash. And so they started selling these South Sea shares, and it had a cascading effect that just made the whole thing collapse over time. Now, this will not happen to Bitcoin, but you have to understand, too, things like this will make price go down, and price goes up and down on Bitcoin more volatile than anything else out there in the traditional market. So We could, and we are probably due for a downturn like this. Now, you have to factor this in when making a prediction. Most people do not. That's why over time, whenever you hear the 250,000, 350,000, even most of the time, the 100,000 predictions, they were all wrong. The only time they got it right was this year, and it took Trump winning the election to get it there. Most of the time, these predictions are way off. If you guys remember the first time, everybody and their mother was saying that Bitcoin was going to go to 100,000, and I was the only person I saw that went on Twitter and called bullshit on all of this. You guys don't understand. I was so close to making a public bet with people like Raoul Paul and BitBoy, saying that I don't think at any point in time we're even going to touch 100K, much less be there by the end of the year. And the only reason I didn't do that is because I was so afraid of these other random people coming in and wanting to take that bet. And I don't know those people, and chances are they would not have been able to pay had I have won. Yet if I didn't take their bet, they would have called me a pussy and somebody who's not really confident in my prediction. And so it would have been a lose-lose for me publicly. But I was really convicted, and you guys knew I was. And if you remember that year, the price of Bitcoin ended up being closer to 50,000 than 100,000. But one of the biggest reasons these predictions fail is because they don't take into account the possibility of a drop in price and what that does. Traders, we know this. If you take a 50% drawdown in your trading account, what do you need to do to get it back to even? 50%? No. You have to create 100% return on your account, which is damn near impossible, just to get back to where you were when you started. It's a really big obstacle to overcome. And now, Bitcoin can do that and has done that many times, but it takes time to do. And for some reason, these people calling for 250K and 350K and a million, they're not factoring this part into the overall equation. Now, I'm just talking about yearly predictions because that's what we're doing here. So just remember that going forward. If we are going to go higher and we are going to have some type of a drop, you have to overcome that drop first, right? So that's one reason, I suppose. But let's move on to the rest of the market outside of Bitcoin. If I'm bullish on Bitcoin, I'm pretty much bullish on the entire market. But you have to remember some things about these altcoins too. We have to bring ourselves back to reality. As of right now, we always base our investment thesis on what these things could be in the future. Right now, I think there's just an oversupply in what a lot of these tokens are offering. So for your layer ones and layer twos, there's a lot of block space to be had, right? How much demand is there right now? And how much demand will there be in the next 4 or 5 years to fill up even a tenth of all the block space being offered right now? The comparison I like to make is when I went down to Paraguay last year, and I stayed in the capital, Asuncion, and I was getting residency down there, which you guys know, this is something I like to do. But Paraguay or Asuncion especially, is being marketed as this big boom town where all these people are going to move to. And there are all these high rises going up, and you have so many real estate people down there right now trying to get in on this potential boom. I told everybody, look, man, maybe these places will fill up. But all I can tell you is that the Airbnb that I like to stay in, and I always put down for a month because you get a nice discount, it was never not available. Like, I could get it anytime I wanted. And I was there for several months. There was never anybody, even for a month ahead, not one person renting that place out for even a day. And it was in a great location. So if that place, even now, wasn't in super demand, what's going to happen in 1 to 3 years when all of these other places in these high rises go on the market? Like, Asuncion is growing, but not nearly at the rate people think it's growing. There will be an absolute oversupply there, mark my words. And I feel like we could have that in reality with some of these layer ones and layer twos. Now, I understand when it comes to crypto, we are speculating. Don't ever forget that. We are putting our money down on what could be, not what actually necessarily is right now. But there's also a problem with that. If you go back and look at your history, the dot-com crash was a perfect example of this. So many parallels. If you go back to that time, so many people were getting into these dot-com stocks, and it had nothing to do with earnings. Remember, the earnings of most of these altcoins are absolute shit compared to the money they're spending. If you want to look at their P to E ratios, be prepared. They're nightmarish. But back during the dot-com boom, people were investing into these companies, and these companies were telling them, look, it's not about earnings. We're not giving you earnings. We're giving you market share. We're not giving you something real. We're giving you something abstract and that has future potential, but isn't actually a real thing. But people invested anyway because they're like, okay, this might be a new thing, but this could just be the way things are done in the future now. Markets change. Incentives change. And we want to be in on the future of the internet. And we all know what happened. The internet did become a thing, in case you guys are not aware. But this crash was massive because it was all propped up on nothing. We're not going to give you real numbers. We're going to give you market share. And everybody's like, okay. And they totally fell for it. So I know this is not a complete apples to apples comparison with what's going on now, but there are similarities. All the hype, all the promises, this new wizardry that's going on with Saylor, it's all there, contrarians. Have we not seen this before? You can't argue against that. If you do, it's just your bias getting in the way. You are not looking at this objectively like you should. You are not looking at this like a grown-up, rich investor, the people we all want to emulate here, would do. Just remember that. By definition, it might seem like we're investing, but I would say we are certainly, when it comes to things outside of Bitcoin, much, much more in the speculator camp than anything. Until these things start to really get used and really start to get integrated into our society, which the vast majority of them have not even come close to doing yet, we are speculating, and we should be prepared to deal with the volatility to the upside and the downside both. Because even though the things in our portfolio here, and if you want to see my portfolio, I will provide a link down below to the blog post that has it updated. Even though they are establishing themselves right now, not all of those projects are going to make it either. It's just how the market works, and you have to be prepared for that. And one of the ways we prepare for that here is by not just investing in the crypto market. It's so easy to do when you see all the outsized gains coming here and not anywhere else. You're like, well, why would I even bother being anywhere else? Because this is still mostly speculation. And if you have all your money in this space, you're going to find out really soon why it's a really bad idea to do that. As bullish as we are here, as much as I just spent almost a half hour providing the bull cases for the overall crypto market, which are very real, the downsides and the bear cases and the risks are real as well. Do not ever forget that. Now, I want to end this episode by talking about some things I want to see in 2025. I think one of the biggest things we need to see, and there's so many great things coming when it comes to real world assets and DePIN, and look, we're going to have dedicated episodes on all that. Will gaming make its push in 2025, or are we still a year away? That's a really interesting question we need answering because a lot of us are invested in that space. But there's so much to come. The biggest thing I would really try to pay attention to, because I think the upside here is extraordinary, because I think it's going to be needed across the entire blockchain and in a lot of Web 2 as well, and that is digital identity. Sorry, privacy guys, you're going to take another L here because this is something that is very, very needed throughout the market. And whoever can really come to the table here and be the one company. And remember, it's probably going to be on the blockchain because you can do this a lot better on the blockchain than you can anywhere else. This is going to be gigantic because a lot of people are not going to want to invest in these protocols at all if there's going to be a bunch of bots and scammers in them. And so this is a step that just needs to happen. And whether you agree with it or whether you don't is irrelevant. The main objective here is if we can make money off of it. And whatever company is going to rise to the top here, whether it's an existing company or whether it's a new upstart company, you really, really need to watch this space. So that's the biggest takeaway I'm going to give you in terms of what to look for potentially in 2025 and beyond. And I will leave you with that after 40 minutes. Thank you for sticking with us here. I hope we provided great value to you with this episode. If I have, please go to Spotify or iTunes and leave a 5-star review. And if you're on YouTube, at the very least, just give me a thumbs up. And since you're already on YouTube, go to the comments and sound off. What do you think? Do you agree with me? Do you disagree with me? Where do you agree? Where do you disagree? We're just making predictions here. I am not the authority on shit. I'm just a guy with a podcast who has done remarkably well in a style of investing that can pay you handsomely even if you don't do remarkably well. So, I don't know. Maybe I know something, maybe I don't. But there it is. But let's gear up, contrarians. We always have to stay on top of things here because as the crypto market, more than anything in the history of ever, has shown us and proven to the rest of the world that we were not crazy. We were just early, and we will continue to be.